Hi everyone, my name is Muhammad Nurisham bin Kasim Chang and I'm going to present to you about customer profitability analysis. From the first slide, what is a customer and profitability? Before producing a certain product, a company must know and recognize who is their potential customer. Customer can be defined from management accounting point of view as an individual or business that purchases another company's goods or services. In a simpler terms, an entity that purchases goods or services from third parties. The second one, profitability. Profitability can be defined as the ability of a company to use its resources to generate revenues in excess of its expenses. In the simpler terms, the ability of the business to earn profit. Both customer and the profitability of a company is the main focus of CPA, which is customer profitability analysis. These two are the main thing inside CPA, as they both are greatly depending on each other. Moving to the next slide, definition of customer profitability analysis, CPA. CPA is a tool for managerial accounting that shifts the focus from product line profitability to customer focused profitability. This tool is actually more on profit per customer rather than profit per product. We can conclude that this tool actually calculates the revenue that coming from customers while at the same time removing all costs from it, thereby calculating the actual profitability per customer. This is an analysis of cost and revenue and also evaluation and reporting of profit gain from customers and cost derived from such operation. This involves every touch point a customer has with your company, including customer service contacts, returns, custom fulfillment costs, and many others. All these are taken into account when we are analyzing the customer profitability. Moving to the third slide, customer profitability analysis purposes. The first point is to provide the organization management with the understanding of each customer profitability. This gives the management a clearer view on which customer can affect the profitability greatly. They can eliminate customers that are costing them more cost than profit. Second point is to improve the strategic marketing planning for organizations or companies. Organization can improve their current strategic planning marketing by using CPA. CPA report will give them in-depth view about their current marketing planning, and they can improve their planning by the weaknesses identified from CPA. Third point is to assist top management of organizations or companies in decision-making processes. Top management can make decisions from the report produced by CPA, since CPA enable them to identify profitable customers and non-profitable customers. Moving to the next point, CPA also help the organization or companies to maximize their profit and generate opportunities for an organization. Customer profitability potential can be utilized fully, and companies can exploit any other areas that involve their customer relationship. To the last point for me, CPA assists in companies' growth, especially in identifying growth opportunities. Companies could generate guidelines for them in order to improve the organization in the future. With this analysis, also, CPA can increase the productivity across the organization by weeding out high maintenance, low profit customers from the organization focus. That's all for me. Thank you.
Hi, Ms. Delaila. My name is Nuratika Izati and I will present on the application for CPA approach. So the general approach to CPA is based on segmenting the customer base to determine the revenues and costs attributable to each segment. This is often combined with an ABC approach. Once the profitable and non-profitable segments are identified, profitable segments are maximized and the non-profitable segments are reduced or eliminated. Okay, so the first step is the customer segmentations. The basis for customer segmentation will differ across companies and across industries. So Currently, there are two basis approach to customer segmentation. The first one is demographic segmentation, is based on observable characteristics such as customer age, gender, and income level. The second one is psychographic segmentations. The psychographic segmentation is based on customer needs and behavior, such as customer values, attitudes, and interests. So we move on to the second step, which is revenue attributable to each segment. Once segments have been identified, the annual revenue is calculated per segment. These calculations is how this is done will depend on the product or service offered by the company. Adjustment to the price paid by the customer for a product or services such as discount, service fee, or product enhancement fee must be included to determine the true amount of revenue generated by each customer and aggregated amount calculated for the customer segment. So step 3, use ABC to determine the cost attributable to each segment. So in this step, the annual cost is calculated per segment. This will involve both directly attributable product or service costs and also customer costs, including allocations of overheads, marketing, sales, and distribution costs. It is these customer costs which are often hidden, such as quality control and inspection costs, order picking, order fulfillment, and customer ordering costs. ABC is an effective way to assign both types of costs to customers.
Laila, my name is Nur Shakira bintu Zulkifli, so I will be presenting for the remaining 3 steps of application for customer profit analysis. So, for the 4th step, which is analyze profitable versus less profitable and unprofitable customer segments. The profitable customer segment defined as those whose annual return exceed their annual cost. The less profitable are those who generate less annual revenue, while for unprofitable, those with either break-even annual revenue and annual cost or making loss. The profitability of customers are likely to fluctuate from year to year. Thus, a more precise analysis could be implied in calculating profitability over the lifetime of each customer segment. Next is step 5, which is developing strategies to maximize the profit of profitable customer segment, or reducing or eliminating the less profitable and unprofitable customer segments. In this step, for the profitable customer segment, a detailed planning will be incurred around the long-term customer relationship establishment to increase revenue and hence the profitability of the company. For example, of strategy to be implemented such as improve customer service, loyalty program, pricing strategies, and customer retention. There are 2 ways in handling the less profitable and unprofitable customer segment, which is eliminating and re-engineering. In elimination, we tend to cease the activities of supplying to this group of customer segment. How we do this? By discontinuing marketing to this customer group, or raising the price we offer to these customer segments, or reduce the advantage of preferable advantage being offered to this group of customer segments. Next is re-engineering, which is restructuring, redefining, or transforming the less profitable and unprofitable group segments into profitable customer segments. How we do this? By increasing revenue generated, or reducing costs, or both that is attributable to these groups. For example, we migrate this group of segments into this different distribution channel, or we alter pricing and service strategy, produce product or service that are suitable for this group of customers. Step which is reviewing the impact of strategies. The proposed strategies to be implemented have to be inspected in order to measure the impact on the performance of the customer segments or their profitability. The strategy being implied should be reviewed after appropriate period amount of time it is being implied. That's all from me. I will pass the presentation to the next presenter. Thank you.
Hello, Miss Delaila. My name is Nur Divya binti Dula, and I will be present about customer lifetime value. Customer lifetime value is the value generated by a customer over the lifetime of a customer relationship to a company. It is also defined as the monetary value of customer relationship. The important concept in that is encourage firm to shift their focus from quarterly projected future cash flow from the customer relationship. The concept recognizes that annual profitability of a customer group will vary from year to year. To calculate the customer lifetime value, require company to make judgment the duration of company relationship with the customer. This include the frequency and amount expected purchases over the lifetime of the customer. Purpose of customer lifetime value is to assess the financial value of each customer, which is customer lifetime value is an important metric because it represents an upper limit on spending to acquire new customer. As Don Peppers and Martha Rogers are quoted as saying, some customers are more equal than others, and a company usually use discount rate, cost of capital in determining the present value of future income. Customer lifetime value also estimates beneficial to companies with large variation in purchasing pattern by customer, and also companies with high customer acquisition costs and companies with high customer retention costs. Based on the slideshow, it shown the formula of customer lifetime value, which is the total revenue customer generate for the company minus customer acquisition costs and minus customer retention costs. For customer lifetime value, we should not ignore timing of cash flow. That's all for me, and I will be pass the presentation to the next presenter.
My name is Nufazila binti Yong, and I'm going to present on advantages and disadvantages of customer profit analysis. So basically, there are three advantages. The first one is improved profitability. So profits can be improved by identifying the customers who generated lowest and highest profits. Besides, it can be improved by identifying the areas that allow cost reduction and cost control. So next is improved understanding of the true cost for each segment. So each segment consists of each customer or each customer group. So at first, cost needs to be identified first, and then it requires all the costs incurred by customer to be included in calculation purpose. So the last advantage is the management is able to make series of strategic decisions. So customer who has generated high profits and costs to be reduced allow the management to make series decisions. So proper planning needs to be done so that costs can be reduced and profits can be generated. So moving to disadvantages, there are three disadvantages of CPA. The first one is no data capture system to measure the accurate estimation of customer segment. So because they cannot specifically create segments to categorize customer. So next is difficulties in calculating cost attributable for each segment. So for example is indirect cost. Overhead cost is usually assigned to each production of each type of product. But since this is customer based analysis and not product analysis, so it will be difficult to determine the cost for each customer. For another example is customer-driven activities cost. So the last disadvantage is CPA may look the combination of products and services purchased by each customer. So profit is calculated based on each product or service. But CPA require management to consider both the products and services purchased by each customer. So therefore, management might overlook the combinations of products and services purchased by each customer, and they might omit any sales generated from that.
Hi, Ms. Delaila. My name is Nur Fazila binti Rostam. I will present on key developments to overcome the disadvantage of customer profitability analysis. The first one is advance in information technology. This has allowed companies to improve the quantity and quality of information concerning customer profitability, including information on revenue cost, retention, and lifetime value. Many companies have sophisticated customer profitability models and customers database. This can be designed for any type of business and to accommodate different characteristics. The data can be aggregated by size of customers, size of orders, service complexity, location, or other factors. Information technology can provide detailed information and analysis on individual customers or groups of customers. Second is managing customer value. The use of customer profitability analysis has evolved into managing the overall value of customer. Customer profitability analysis also includes analyzing customer lifetime value and impact, as well as managing profitability through analysis of customer segments and margins. Customer lifetime value looks at the profitability of the customer over their lifetime. Customers can give an impact on other customers, company employees, and other groups through their transactions and communication. For example, they can refer other customers on what company offerings. Based on case study adapted from Button in 2006, an insurance company known as A Insure Limited decided to use customer profitability analysis to identify profitable and non-profitable customers. After it grew concerned about the poor financial performance of one of its policy options, the company collected customers' data through original policy proposal forms which were stored electronically in customer database. It was able to conduct a complex cross-correlations between non-cost drivers and the demographic and other characteristics of policyholder. The cost drivers were commission payments to financial advisor who sold the policy, early surrender of the policy by the policyholder, changing of bank details and consequent chasing of missed premiums, and responding to customer queries. The analysis identified that the policy was unprofitable when sold to recently retired client but was profitable when sold to other client segments. The reason is because retired customer has more time to review and consider changes to their insurance policy and to make queries. In response, the company reduced agent commission on the policies according to the age of the policyholder to discourage them from selling to the non-profitable client segments. Example for real companies in Malaysia that use customer profitability analysis is Telekom Malaysia. Telekom Malaysia is a leading company in telecommunication services. The company uses activity-based costing for customer product analysis. The activity-based costing implementation in Telekom Malaysia was initiated by Finance Industry Division of the company in 1996. Telekom Malaysia has two profitable customers. The first one is household and individuals. Telekom Malaysia provides telephone services, Wi-Fi, and more programs on broadband services for the household or individuals. The second one is small medium enterprise. Telekom Malaysia provide telephone services, broadband or data connectivity and business tools. Other than that, Telekom Malaysia also are seeking more collaboration opportunities with the hotel industry to expand its hospital entertainment solutions. In conclusions, customer profitability analysis is a valuable tool to firms who want to maximize profit by analyze customer behavior. That's all from us. Thank you.